into something that I'm sure a lot of you have thought about at some point, business loans in Australia.
And to do that, we're going to be looking at some information from online resources, websites specializing in business loans, some finance brokers.
Yeah, kind of unpacking what's out there, because I feel like a lot of people have this, image of like, oh, I'm going to go to a bank and they'll just give me a loan.
It's not quite that simple.
You're not quite that simple.
Yeah.
So let's start with okay, you have this great idea. You want to, open that cafe. You want to launch that tech startup. You want to take your business to the next level.
That dream often needs a little financial fuel.
Yeah.
And that's where these loans come in.
Exactly. And what kind of loans are we even talking about here? What's even out there?
Well, there's a surprising variety, actually.
Oh, okay.
Yeah. You've got your classic startup loans.
Yeah.
Expansion loans.
Yeah.
Those are for when you're ready to really scale up your business.
Yeah.
And then there's equipment financing, which is pretty self-explanatory.
Yeah, get that espresso machine, get those computers, whatever it is.
Right, exactly.
But then I see these things, I don't know if you've seen these, like low doc loans.
Yeah, those are interesting.
Yeah, and I was like, what's the catch?
Well, the catch, often they come with higher interest rates.
Okay.
But they require less paperwork. Some lenders just want to see, 90 days of your bank statements.
No.
Rather than, years of tax returns.
Right. There is a big difference.
Big difference.
Is that kind of like those payday loan things, or is it not quite that predatory?
No, not quite that
Good
predatory.
God.
Still geared towards legitimate businesses, but they cater to those who might not have those, squeaky clean financial histories.
Yeah.
Piles of traditional documentation.
Right.
So they can be a lifeline, I guess, for startups and sole traders.
Yeah.
But you are right to be cautious about those interest rates.
It's not a free lunch, right?
Right.
But what I find interesting is there are loans, it seems, for any industry imaginable.
Yeah, pretty much.
Aquaculture, crypto equipment, food trucks.
It's amazing,
Yes.
You can get funding for just about anything these days.
So then how do the terms and interest rates work?
Well, they can vary a lot.
Okay.
Depending on the type of loan, the lender,
Yeah.
and even the current, economic climate.
Right.
You could be looking at anything from a 1-year loan to a 15-year loan.
Wow.
Or even up to 30 years if it's secured by residential property.
30 years? That's a house.
It is.
That's a long time.
Longer terms might offer more flexibility, but you will end up paying more in interest over the life of the loan. So
It's a trade-off for sure.
it is definitely something to consider.
Yeah. The sources do mention competitive interest rates and no early payout fees.
That's good.
But what does competitive even mean these days?
That's a great question. It really depends on a number of factors.
Right.
Including what the Reserve Bank's cash rate is,
Oh, okay.
the lender's own risk assessment,
Yeah.
and the overall economic outlook.
Yeah.
So it's important to shop around and compare different offers before you commit.
So don't just jump at the first thing that looks shiny. Right?
Exactly. A little research and due diligence can save you a lot of money in the long run.
Speaking of due diligence, one of the sources was really pushing using a business loan broker. What do you think of that? Are they really necessary?
I wouldn't say essential, but they can be extremely helpful.
Okay.
Especially if you're new to all of this, or if you have a complex financial situation.
Yeah.
Think of them like a real estate agent for loans.
Okay.
They know the market, they speak the language, and they can negotiate on your behalf.
So they can help cut through the jargon and stuff.
Yes, absolutely.
And find the best deal.
That's the idea. They can save you a lot of time and stress and potentially get you much better terms than you could on your own.
Okay. Interesting.
But of course, they charge a fee for their services.
Right. So gotta weigh that as well.
Yeah, definitely.
Okay, so let's talk about what does it even take to qualify for one of these loans?
Well, lenders are going to want to see a very clear picture of your finances.
Oh, okay.
That means your income, your expenses, any current debts you have, and of course, your credit history.
So if I've been, tracking my spending, paying my bills on time, I'm in good shape.
You're definitely on the right track.
Okay.
But what if you're self-employed? You don't have those traditional tax returns.
Right. Because a lot of people listening probably are.
Exactly. Don't worry, there are other ways to verify your income, like bank statements or accountant declarations.
Oh, that's good to know.
Yeah.
And then credit score, is that a make or break?
They are a significant factor, yeah, for sure.
Okay.
But even if your score isn't perfect, there are lenders who specialize in what are called low credit score loans.
Wow. Okay.
They'll often have higher interest rates.
Okay, right. It makes sense.
But it's definitely an option to explore if you've had a few, bumps in the road.
Yeah, life happens.
Life happens, exactly.
So don't be afraid to shop around. Let's talk about what can these loans actually be used for? Like beyond the obvious, like buying inventory or, like we said, the espresso machine.
Right. The sources actually give some pretty good examples.
Oh, fun.
Think about giving your, say, office or your shop front a complete makeover, a stylish fit out
Yeah.
that will attract more customers.
Oh, okay. So it's not just about the core stuff. It's
Right.
like you can use it to make your space more appealing.
Yeah, create a vibe and experience.
Oh, right. Like I could use it to get comfy chairs for my cafe.
Exactly.
And like nice lighting and, make it a place where people want to be.
Make it Instagrammable, all of that.
So it's a strategic investment.
It is.
In the experience.
Exactly. Enhance your brand and ultimately drive business growth.
Okay, that's interesting. So there's a lot to think about when it comes to even what you can use the loan for.
Yeah, there is. Definitely.
Not just about getting the money. It's about
the strategy.
the strategy.
Exactly. Welcome back to our deep dive into business loans.
We've been talking about all the things you can do with a loan, but what about things to avoid? What are some mistakes people make when they're applying for one of these things?
Oh, yeah. There's definitely a few pitfalls to watch out for.
Oh.
One of the biggest ones I see is people not being completely honest about their financial situation.
Oh, really?
Yeah. I think maybe they think if they downplay their debt a little bit or inflate their income, it'll increase their chances of getting approved.
Oh, so they're trying to kind of game the system?
Yeah, but lenders are pretty savvy, they'll scrutinize your bank statements, credit reports, tax documents, all that.
So they're going to find out.
Oh, yeah. And if they find discrepancies, it raises a huge red flag.
Yeah, okay.
Could even lead to your application being rejected.
So yeah, better to just be upfront, right?
Honesty is definitely the best policy.
What else should we watch out for?
Don't underestimate the power of a strong business plan.
Oh, okay.
Lenders want to see that you've really thought things through. You have a clear vision for your business and a realistic plan for how you're going to use those loan funds.
So it's not enough to just say, I need money.
Right, exactly.
Show them what you're going to do with it.
You got to show them the strategy, how it's going to translate into growth and profitability.
Okay, so it's all about that plan.
It is.
So if I'm putting together a business plan, what are some key things I should include? Like bullet points.
All right. Well, first off, you want to really clearly articulate your business goals and objectives. What are you trying to achieve? How is this loan going to help you get there?
Okay.
Then provide a detailed financial analysis. So that's, your projected income and expenses, cash flow projections, your repayment strategy.
Oh, okay. So they want to see, you've done your homework.
Yeah, they want to see those numbers, make sure it all makes sense.
It's not just a whim, I think I need a loan.
Right.
Okay,
Yeah.
that makes sense.
And they want to see that you can manage the money responsibly.
Okay. Another thing, and this is something I've definitely done in other areas of life, not shopping around.
Oh, yeah.
Getting excited about the first offer that comes along.
That's a common one.
And just, jumping on it.
Yeah, you get excited, you want to get the ball rolling, but that's how people end up paying way more than they need to.
So really compare, right?
Compare, negotiate.
Okay.
Don't be afraid to walk away if you're not comfortable with the terms.
Play hard to get.
A little bit, yeah.
Okay, I like that. Now, collateral. We talked about it a little bit before, but can you explain it? I'm 5. What is it and when do I need it?
All right, so collateral is basically an asset that you pledge as security for the loan.
Okay.
Think of it like a safety net for the lender.
Okay.
So if you default on your loan, they have the right to seize that asset and sell it to, recoup their losses.
So it's like a pawn shop, but for businesses.
Pretty much, yeah. Good analogy.
So what kinds of things can be collateral?
It could be real estate, equipment, inventory, even financial assets like savings accounts or investments.
So if I put up my house as collateral, that's a pretty big risk, right?
Yeah, it's a big risk, yeah.
So why would I choose a secured loan over an unsecured loan?
Well, secured loans usually have lower interest rates.
Oh.
Because the lender has that safety net.
Gotcha.
So it's less risky for them.
Less risky for them.
They're willing to give you better terms.
So when would an unsecured loan be a better option?
Well, unsecured loans don't require any collateral, so it's less risky for you, the borrower.
Okay.
But they often come with higher interest rates.
Right, because the lender is taking on more risk.
Exactly.
So it's a trade-off, lower interest rates, but risk losing an asset, or higher interest rates, but less personal risk.
Precisely.
So you got to weigh those options.
You do.
Now, those low doc loans, we talked about them a little earlier. Can you explain a bit more how those actually work?
Sure. So with low doc loans, Lenders are basically trying to streamline the application process.
Mm.
So instead of requiring years of tax returns, financial statements, they might just ask for your recent bank statements, maybe covering the past 90 days or so.
So less paperwork.
Way less paperwork.
Okay, so that's appealing.
Very appealing for startups, freelancers, businesses with less conventional financial records.
Gotcha.
But we did mention that they often come with higher interest rates.
Right.
And they might also have lower borrowing limits than full doc loans.
Okay.
And the approval criteria can be stricter, so.
So while they offer more accessibility, they might not be the right fit for every business.
Exactly.
This is where, again, it sounds like having a broker would be helpful.
Yeah, for sure. They can help you weigh those options, compare different loan types, find the best fit.
So they're like your loan matchmaker.
Yeah, something like that.
Okay, cool. Now, shifting gears a little bit, talking about the purpose of the loan.
Right.
You mentioned before, lenders want to see a clear plan for how those funds are going to be used.
They do.
So what are some examples of a worthy purpose, I guess, for a business loan?
Well, let's say you're a retailer and you want to create a more inviting, engaging customer experience.
Okay.
You could use the loan to revamp your shop front,
Yeah.
Maybe create a really stylish fit out, enhance the ambiance.
So like comfy chairs in the cafe, make it look nice, right?
Exactly.
Okay.
It's about investing in those elements that attract customers and ultimately drive sales.
So it's a long-term strategy,
It is.
not just a quick fix.
Exactly.
What about, like, I guess sometimes the best investments aren't even visible to the customer, right?
Yeah, right.
What would be an example of that?
Well, imagine you're running an online business and your website's getting a bit outdated.
Oh, yeah. Seen that happen.
It's slow, it's clunky, it's not mobile friendly.
People are going to bounce right off of that.
Oh, yeah, that's a recipe for losing customers.
Yeah.
You could use a business loan to completely overhaul that website, give it a sleek, modern design, seamless user experience, maybe even some integrated e-commerce features.
Oh, so like use it to upgrade your technology.
Exactly. Elevate your online presence.
So it's, again, like it's not just about the physical space.
Right.
It's about, your digital space as well.
Absolutely.
Okay. So many things to think about with these loans.
There are, for sure.
What about, are there any other kind of strategic uses for business loans that we haven't touched on yet?
Oh, yeah, for sure.
Okay.
Let's say you're in an industry that has, like, seasonal peaks.
Oh, okay.
Retail during the holidays or tourism in the summer months.
Yeah.
You could use a business loan to plan ahead, make sure you have all the resources you need to meet that increase demand.
So like stocking up on inventory, hiring more people,
Exactly.
launching marketing campaigns, all that.
Yeah.
So using the loan to really capitalize on those busy times.
Right. It's not just about surviving, it's about thriving.
Yeah, I like that.
Taking calculated risks, investing in your future.
Okay, that's a really good point.
Yeah, set yourself up for long-term success.
We've covered so much in this deep dive. I feel like we've really gone, deep in all the different types of loans and whether to use a broker and all the things to watch out for.
Yeah. Really emphasize that strategic thinking.
Right.
It's not just about getting the money, it's about using it wisely to grow your business.
But before we wrap up, I want to talk about something that I feel like maybe doesn't get talked about enough, and that's the repayment process.
Oh, yeah, for sure.
Because it's easy to get caught up in the excitement of like, oh, I'm going to get this loan, I'm going to do all this stuff.
Right.
But then there's that monthly payment.
Yeah, the reality sets in.
Exactly. So how do you, what are some tips for managing that?
Well, I think the most important thing is to have a really solid repayment strategy in place before you even sign anything.
Oh, okay. So before you even get the loan.
Before you even get the loan, you need to understand the interest rates, the fees, the repayment schedule, make sure it aligns with your cash flow projections.
So you're not just like signing up for something you can't handle.
Exactly. Don't just focus on the short-term gain. Think long-term. Make sure those payments are sustainable.
Okay, that's a really good point.
And if you're struggling to make those payments, don't just ignore it.
Oh, yeah. Don't bury your head in the sand.
Talk to your lender,
Yeah.
They might be willing to work with you.
Okay.
Adjust the terms or explore other options.
So communication is key.
Communication is key, absolutely.
Now, I want to shift gears for a second because we've talked a lot about the practical stuff, but I'm curious, what about like the emotional side of taking on debt?
Oh, yeah, that's a big one.
Like that can be a lot for people.
It can be.
What are some of the challenges there for entrepreneurs?
Well, I think one of the biggest challenges is overcoming that fear of failure.
Oh, yeah.
Taking on debt is a risk, and the thought of not being able to repay it, that can be really scary.
It's a lot of pressure.
It is. It's a lot of pressure.
So how do you manage that? What advice would you give to someone who's like feeling that pressure?
I'd say, first and foremost, build a strong support system.
Okay.
Talk to mentors, advisors, other entrepreneurs who've been through it.
Yeah, people who get it.
Yeah. They can offer guidance, encouragement.
So you don't feel alone.
Exactly.
Yeah.
And don't forget about self-care.
Oh, that's so important.
Take time for yourself. Do things that help you de-stress, recharge.
Exercise, meditate, hang out with your dog.
Whatever works for you.
Yeah.
Those moments of respite can really make a difference.
So it's not just about the money. It's about like the whole person.
It's about the whole journey.
Yeah. Well, this has been a really insightful deep dive.
It has.
We've learned so much about business loans in Australia.
We have.
And I think, the key takeaway for me is it's not just about the money.
Right.
It's about that strategic thinking. It's about the planning. It's about, having the right support.
And the courage to go for it.
Exactly. So to everyone listening, we hope this has given you the information you need to make informed decisions.
And the confidence to pursue your dreams.
Exactly. So until next time, keep dreaming big, and we'll catch you on our next deep dive.
See you then.